Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the Nasdaq Composite Index. We'll start with the monthly Nasdaq chart. Now, critical, we did lose support at the front end of the cloud. The market's actually down more than 30%, 32% since the cloud chart sell signal at the top in the chart. That comes soon after that very negative topping formation candle there. That was another big warning signal. But there was a daily Ichimoku sell signal right up here at 15,600 zone. The market, the taps then just opened. We then lost support at the front end of the top end of the cloud. And now the index also sliced through this important level at the front end of the cloud, this 11,198 to 11,200. Now that is a critical support zone that the market did not find support at, as well as these lows there. So between 11.2 and 10.8 is a major support zone that the market now dipped below. Will be interesting to see if we're going to get a rebound from these levels this week, but there's downside risk in this market down to this old high here, roughly 9.8, and then these cloud chart levels there at the top end and the bottom end of the cloud. So that's the monthly big picture. The key takeaway here is this front cloud support zone that did not hold. And if the market manages to find support on a weekly or a daily chart, that would be now a new resistance zone to watch out for. But so far, this bear market rally continues to accelerate to the downside. Now, looking at the weekly Ichimoku cloud, what's interesting here is that we had a sell signal up there, sliced through the cloud chart level. There was a couple of sell signals through there as well, and then the market moved into a confirmed bearish outlook. Price action below the cloud is bearish long term, so that was a long term sell signal up there. And now on the way down, key support levels can come into play. We've got this front cloud support zone here, 10,300, 10,400 roughly. Now, interestingly, I suspect that it looks like there's a downward continuation pattern emerging here. We've had one leg down there, then a second leg down there, and the third leg down there, and a third leg can go down as much as this low here. And that would complete this three waves down kind of situation where we had one big leg down, and then a short rally, another big leg down, short rally, and now another big leg down to 9,350. That's the downside targets on the weekly. But it's got to get through 10,400, roughly 10,300 support zone, and will be interesting to see if we're going to get a little kind of rally like that at that point in time before it continues down to 9,343 zones. But bearish outlook on the daily with short-term swing trades from these key support levels back up to the bottom end of the cloud. That's the new resistance zone, as well as the standard line of the cloud. So these are the two upside risk targets, 12,000, and then that zone there, 12,600. These are the upside risk targets. And downside risk is 10,387 and 9,343, which is the completion of this downward third wave. One wave down, retracement, one wave down, retracement, and then another wave down. And that would roughly meet that kind of downside zone. Now let's turn to the daily. Now looking at the daily, critical zone here, this 10,565. Index has been fighting that zone. If support holds there, we should see a rebound back up to the bottom end of the front end cloud chart resistance, as well as this old resistance zone, and then the top end of the cloud there. That's another key resistance zone if we get a relief rally in October. Those are the two levels to watch out for. But critical for them, if the index manages to rebound from this zone, that's the upside potential. But also we've got this downward continuation pattern emerging. One leg down, a relief rally, one leg down, relief rally, and then another leg down. So it's quite possible that we can get back down to 9,818 and 9,343 based on this third wave down, a downward continuation pattern as well on the market. So that's the downside risk. If this support level fails, that's significant, then we're definitely going to get down to these levels. But we're interested to see if we're going to get a bit of a relief rally as the support in these levels might hold. If support holds, we should get that rally back up to the bottom end of the cloud. If support fails, then we'll complete this downward continuation pattern with downside targets of 10, 30, 10,387 9818 and then 9343 downward continuation pattern. So it's from that high, sell off, a bit of relief rally, sell off, and then a bit of a relief rally, and then a continuation sell off. So this week's absolutely critical to watch out for any kind of support coming in around this 10565 zone. Now looking at the 4-hour Ichimoku, gives us a bit more idea what's going on intraday. You can see a tremendous rally off this cloud cross signal there. Great swing trade, rebound trades. Got a bit extended, ran into trouble with old cloud chart resistance levels there as well. Sliced to the bottom in the cloud, only to run into trouble at the bottom in cloud chart resistance, and then the only position there was to go short as it sliced through these cloud chart levels. Now critical, once again, that 10565 zone. Will be interesting to see if we get that zone to come through. But yeah, once again, the magic number is 3. Again, we've got this downward continuation pattern emerging. So one leg down, second leg up, one leg down, and now the third leg, little relief rally possible. Yeah, back up to the front end of the cloud, yeah, and then another big leg down. So that's the downside risk targets, is this downward continuation pattern. One leg down, relief rally, one leg down, relief rally, back up to the bottom end of the cloud, and then another big leg down with these downside targets that we got off the daily Ichimoku. But so far still bearish on 4-hour with short-term swing trade relief rallies possible, bearish on the daily. Critical for this 10565 level to hold this week. We'll be interested to see if we're going to get something similar like this, a dip below just to undercut it and then rebound from that zone. So keeping an eye on 10387 as well for a potential rebound. But watch out for that third wave downward continuation pattern being completed on all time frames. And it's a fascinating trading pattern. Until next time, happy cloud chart trading. Bye for now.